Hello everybody, welcome back to our channel. It has been almost 2 weeks since I uploaded the last video, so my apologies for that. The dollar is the king, at least for now. To start the video, I would like to say that today I'm using random images of dollar bills made out of gold. Unfortunately, I do not own any of them. I just think these gold notes are beautiful and would enhance any collection. Therefore, I would like to share these images with you. As we know, gold and silver got hammered last week after the Federal Reserve announced that they might think about increasing rates to fight inflation at the end of 2023. So the Fed also has been saying that inflation is temporary. So how temporary this inflation will be for the Fed to start fighting against it in 2.5 years from now. So other thing the Federal Reserve has been saying is that they want to target inflation at 2%, but inflation is already more than double of it. In fact, inflation is around 5% and the data that we have is actually from last month. So we are not having 5% inflation, we already had it. If inflation is at 5% a year, the accumulated inflation from today, to the end of 2023 could be 10%. And as per Fed statement, they might raise rates from current 0.25 to 0.5% in 2023. So clearly, the 0.5% interest rate will not be very powerful to fight inflation. That will be already 10%. I know. Some people will say that inflation is permanent, but the high inflation, like 5%, is temporary. Sure, that could be a valid point as well. Anyway, the fact is gold and silver got hammered, and in my opinion these metals are now in oversold territory. The market took an extreme reaction after the Fed announcement, and it's normally like this. The markets overreact and then few days or weeks later it corrects to more reasonable valuation. Nevertheless, I would not rush to buy the dip yet. I would observe what's gonna happen on the next few days. So now it's Sunday night and the trading of gold and silver and commodities will open soon in the Asian markets. I believe investors will soon get used to the fact that the Federal Reserve is not raising rates tomorrow, but the market has reacted as if the rates were already increased today. The Federal Reserve only suggested a possibility of an earlier increase by the end of 2023, which is still in 30 months away from now. In addition to that, the Federal Reserve is still buying 120 billion in assets every month. Joe Biden's infrastructure plan will eventually be implemented, so the Fed and the Treasury are still flooding the market with printed money. Because of the current and upcoming spending, I don't expect the dollar to stay up and the price of gold and silver to stay down. My expectations is for gold and silver to regain their lost ground on the weeks ahead. I know it's frustrating to be holding gold and silver when things like this happen, but this reaction of the market has affected almost all asset classes, not just gold and silver. For instance, Bitcoin lost again 14% on a week, Nasdaq, S&P 500 and Dow Jones also lost on the week. Some of the tech stocks perform well, such as Tesla and Apple. In moments like this, when there's a little fear in the market, investors sell assets trying to minimize losses. By selling assets, people are exchanging their shares of companies or whatever assets they have back into dollars. Consequently, the dollar exploded higher as the market sold off. And it's a cycle that happens repeatedly in history whenever there's a market pullback or a crash. At this time, it's looking like a small pullback, not as a crash. But why the dollar is a king? Because everything is priced in dollar. So if the dollar goes up, things get cheaper. So if the dollar goes up, commodities like gold, silver, lumber, copper, soybeans, corn, oil, you name it, they are priced in dollars, so they will normally go down. On the other hand, if the dollar goes lower, then commodity prices like gold and silver, oil, etc. will go up. Now, if the dollar keeps getting stronger in the next few days, then your dollar will have more purchasing power to buy assets such as gold, silver, or whatever you choose to buy. Nevertheless, I repeat, I don't expect the dollar to sustain this momentum of price increase, as in my mind, it was an overreaction of the markets and things should settle back to normal of falling dollar and commodities price increasing in medium term. 2023, when the Fed might be talking to increase rates, is still far away from today, and in my mind the market got ahead of itself. Events like this, like small pullbacks, happen every year, and that's why we should have some cash aside to buy assets at a discount when events like this happen. The best way to make money is right away when you buy an asset, and you can do that by buying something at a discount at these price drops of markets overreaction. Unfortunately, I did not see that coming, and I do not have much cash aside right now, but I still have some. The only reason why I will not buy gold and silver at the moment is due to the fact that metals are already overweight in my portfolio. So I chose to buy Guangzhou RNF Properties. This is a Chinese real estate stock. It trades in Hong Kong Stock Exchange, and the price has dropped almost 16%. So if it goes back to the price that it was before the market overreaction, I will be already making more than 16%. Not to mention that these shares are paying 13.5% in dividend. So I have a possibility here of making 30% right away. Some of you obviously remember in March 2020 when the market had a big crash. The immediate response was the dollar spiking up in price and then devaluing slowly since then. I believe we are starting at the same scenario right now. Also, if the price of the dollar gets higher, it lowers inflation. And if there's no inflation, there's no need for the Federal Reserve to increase the rates. But also, if the Federal Reserve doesn't increase the rates, it's very unlikely that the dollar will get stronger. As we can see, we might be rotating in this cycle of uncertainty in the market for a while, so you can expect volatility. Until then, I would like to be getting paid in dividend and waiting for the market definition. If you are holding gold and silver or other commodities, you can expect the volatility for the reasons that we just debated. So the narrative has changed and we are now on the transition phase. Some people think the Fed will raise rates in 2 years' time. Some other people think the Fed will not, and central banks are trying to find an excuse to print more money. What do you think? Please write your thoughts in the comment section below, and remember, patience is the main factor here. Just remember, different assets have different maturity time, and if you jump from one asset to another, you might just lose your wealth. We must be prepared for any outcome, hope for the best, and prepare for the worst. This will complete the video for today. Thanks for watching, stay safe, protect your wealth, and take care.